Hey everybody, this is Tom Hart with Benton Oakfield. Today we're going to make the most interesting video you've ever seen in your entire life discussing dental quotes and how to read the dental rate sheets. So here we have my desktop, and what I'm going to do is I'm going to open up an example. This is a rate sheet from Guardian, and let's go over the quick things you got to look out for. So here you can see the plans in the middle. All right, these columns are not correlated with these services, so you can see based off your zip code and the amount of employees that are going to be enrolling in the plan, that will determine which quadrant you're going to go with. So for instance, we're in Midtown Manhattan at zip code 10036. So here we have 100, so we're going to be picking this plan. VZ, let's say we have 7 employees in our example. So we're going to be going with this one in the middle, because we have over 5 employees but under 15. And here we can see the rates for an individual with a spouse, an individual with children, and a family rate. And also the additional orthodontics rate, which would be $15.75. So now that we got that, we're going to go down and check out the services that are offered or categorized by the insurance companies. So here we have preventative services. You can read all that on your own. Then we have the basic services, which is going to be repairs, extractions, things like that. And then we have our major services, which are prefabricated post and core, the crowns with the metal or resin, bridge work, implants is a big one nowadays. So these are the categories of the services. Then we're going to move up to here. This is the first big thing you got to look at, is the in-network and out-of-network. When it comes to dental insurance, I always say if you're going to go out-of-network, it's useless because you're just going to be overpaying anyway. That is a general term, and it does vary case by case. So it's best to speak with us about your specific needs, and then we could go from there. But for majority of the people, just stay in network. Just make sure you have a strong network like Guardian or some of the other providers. So here we can see for the preventative services, which is down here, the insurance company is going to pay 100%. For the basic, they're going to pay 80%, and for the major services, they're going to pay 50%, leaving you on the hook for 50%. Also, you have a $50 deductible in regards to this type of plan. So the deductible is waived for the preventative services, you can see over here. However, there is an annual maximum that the insurance company is going to pay out for these services, which in this example is going to be $1,000. Then over here we have the reimbursement, which is going to be dealing with the fee schedule. We're not going to go over that in this example or looking at these rates. The fee schedule is the arrangement that the dental insurance company has with the doctors or dentists or the dental providers. You don't really need to worry about this except if you have a rogue dentist, and I am using the term dentist in a general term for all the other fields that deal with teeth or oral care. Just be aware of that. Here we have the out-of-network services. Like I said, we're just going to throw that out the window in this example because it's really not worth it. So now when you're comparing these plans, you can see this is plan VZ. And so we scroll down to the next page and we're going to go to plan PX. Here we have 180.50, and then when we go back to VZ, we have 180.50 with a $50 deductible, and everything kind of looks the same. So why is this $58 for an employee and this one is $38 for an employee? Well, the big thing is the out-of-network reimbursement. So you see over here it says fee schedule. So that's the insurance company saying, hey, these are our fees that we pay for out-of-network services. Take it or leave it. Now here, this is a really wacky kind of thing that it really only happens in dental insurance, where you see this 90th. So what the insurance company is going to do is they're going to round up 100 dentists in your area, and they're randomly going to pick the 90th one and base their reimbursement off of what that dentist would charge. It's kind of a wacky system, but you can see you're going to be paying an extra $20 a month for that service. If you stay in network, you don't have to worry about it at all, so you can save the $20 a month if you're an individual. Now, another big thing I want to talk about is going down the other plans. You can compare them all, and just like medical insurance, you're going to weigh the pros and cons, the premium versus the benefits. Of course, when you're dealing with us, we give you a breakdown and we go over the pros and cons to each one to clearly explain them all so you know what you're getting yourself into. But the other big thing I want to go over is the annual maximum. This is a big thing because many people anticipate on spending over $1,000 in insurance a year on the dental insurance. So you can increase this on each plan based off of a multiplier that we'll see all the way down at the bottom. I also want to make it very, very clear that when comparing these plans, you may see a plan with a higher annual maximum, which is obviously going to jack up the premiums. However, you might be better off selecting a lower plan, going with the multiplier, and increasing the annual maximum yourself. It's kind of a funny thing. So here are all the plans. We just keep scrolling. We're going to go down to the last page, which you will see right here. Here we could see some interesting things. So the annual maximums I was talking about that have $1,000. Let's say you don't anticipate on really utilizing the dentist at all, and you're saying, hey, there's no way I'm going to get up to $1,000. You could actually decrease your annual maximum to $750. You multiply the premium by 93%, and boom, you actually save money every month. Most people increase it to $1,200 or $1,500. So then you're going to take this multiplier, multiply your premium by this ratio, and it's going to increase 14% or 6%. Then if you really anticipate on having issues that year, you could go up even higher to $2,000 or $2,500. Now there is another multiplier I want to make you aware of. Over here, you can see the participation requirements. You need 65% of all employees to enroll into the plans, or else you're going to get penalized. So here you can see if you have 60 to 74%, those rates that we went over before, or the premiums, are going to be what you pay. If you have less than that, say only 25% of your employees are participating, you're actually going to pay an extra 34%. Then, if you have over 75% of your employees participating, you get to save 1% off those monthly premiums. Definitely try to push your employees for participation because it saves the overall group money. After going over all this, and I know I went through it fairly quickly, but your head's probably spinning and you're saying, hey, I'm not really sure how to compare all these still. So what we do for our groups is we actually give a breakdown, which you can see right here. Let me open it up. These are different rates because this was an actual spreadsheet that we put together for a client. However, you could see that we broke down the plans and we kind of made these notes on why the plan was more money. Then when comparing all these plans, I really like the UD plan because if you look at all the rates, the UD plan, it's not the most expensive one. However, it's going to cover 100% of preventative care, 90% of basic services, and 60% of major services, but it also has a $0 deductible. And then now, because this does have a $1,000 annual maximum, which I'm not so happy about, what we could do is we can increase that maximum. Here you can see that we have the $50.07 premium. And let's say we want to bump up the annual maximum to $2,000, which is going to have a multiplier of 1.14, adding 14%. So we'll put our multiplier here, and then our monthly premium is going to be the $50 times our multiplier. So our premium is going to increase to $57.08. This is not that big of a deal for an individual because you're only paying an extra $7. But let's try it out with a family. So we have our $136.02 for the premium. And then our multiplier is the 1.14. And then we're going to just pull out the same thing. So you can see it goes from 136 to 155. So you can see when it comes to a family, we are adding an additional $19 a month. So it does add up over the year. However, I just want to break this down so when you get a quote or looking at a rate sheet, you can actually look at it and start comparing apples to apples. Of course, a good broker would always be willing to walk you through this. If you'd like, you could always give us a call at 212-365-4553. We'd be happy to walk you through it. And remember, your business is our mutual interest. Have a good one.
New York!